Start from the International Monetary Fund and World Bank, which they wrapped up their annual meetings in Morocco with some progress towards increasing their lending resources and concerns about global financial stability. Other critical issues that were discussed includes global economy weighed down by debt, inflation and conflict, a growing wealth gap between rich and poor countries, and floundering efforts to tackle climate change. Meanwhile, in particular, is a look at the participation of Nigeria and the insights that were gleaned during the meeting as Nigeria's delegation engaged with other leading experts on key economic issues plaguing the world. For more insights, I'm being joined by Mr. Tajuddin Ibrahim, who is the Director of Research and Strategy with Chapel Hill Durham, to look at the outcome of this meeting and, of course, projections ahead. Thank you so much. It's good to have you on the show.
Thank you for having me on the show today.
A lot of takeaways from this meeting. I'm sure you agree with me. But for you, what is so significant before we now start to delve into one or two issues? Yes, issues around debt were raised, issues around inequality, addressing poverty and all of that, climate change. We can go on and on. But to you, what strikes you in all of this?
I believe that one of the major sort of takeaways from the IMF's meeting is the recognition that IMF now, stands for the creation of a world that is free of poverty and, on a livable planet, which I believe is a good thing in terms of being inclusive, for global economic growth. And if we consider the fact that the IMF plans to ensure that they increase their lending resources, I think that is another major positive, development in that regard. But there are concerns around, shocks from Israel-Gaza conflict, which I believe is something that, should concern, the entire world. We are, yet to recover fully from COVID-19 on a global scale. And I think also we are still battling globally with, the war between Russia and Ukraine. And now we have, Israel and Gaza, being at war. So which are some of the major concerns for the IMF in terms of global economic growth. And I also like the fact that, the IMF recognizes that, developing and emerging economies will require, sizable support considering, headwinds such as, number one, geopolitical uncertainties, number two, higher interest rates across major central banks in the world, and, number three, a stronger dollar, against major, global currencies, particularly those currencies in the developing and emerging markets. So these major constraints, for instance, downside risks, to the development of the global emerging and frontier market, and any form of support that the IMF can provide, they signal that they are ready to provide, such support. And Nigeria, to my mind, looks like one of the countries, that will need IMF's or World Bank support in this regard. There are positive sorts of developments also around, debt, relief. There are discussions, for Zambia. In that case, there are also disclosure by Kenya around ensuring that they do not, excessively fall into, a debt trap. So they are looking to buy back, some of their international debt. These are some of the, key takeaways, to me, and I believe, the future looks bright.
Economic growth outlook now, and of course, global inflation. Just a few minutes ago, inflation in Nigeria is again ticking up as expected, 26.72%, I guess. What do you think can be done to Bringing down inflation is not very easy, Mr. Taj.
So it is not easy to bring down inflation, honestly speaking, just like you said. But the reality is that the element around imported inflation, seems to have, slowed down considerably. If you consider the fact that, global inflation is coming down across major central banks. Out of the 20 economies that we track at Chapel Hill, Denham, about 18 to 19 of them are currently seeing moderation in their inflation on a year-to-date basis. Nigeria, in this case, seems to be like the outlier, where we continue to see inflation rising. And that suggests to me that the driver of inflation in Nigeria in particular is not so much of external factors. It seems to me to be more of local factors, and speaks to the fact that the government, the monetary authority have to work together to ensure that we put in place reforms that can bring down inflation in Nigeria. Kenya, also Turkey, for instance, has that plan in place to ensure that they break down inflation. So Nigeria, should also look inward to do something, internally that can, tame inflation, because we are going in the different direction relative to the entire world. The entire world is seeing moderation, but Nigeria is seeing high inflation.
All right, Mr. Ibrahim, let's move on now and look at the Global Financial Stability Report, also put together by IMF, worried about high interest rates and how this would affect, of course, around 5% of banks globally are vulnerable to stress if the rates remain higher. And of course, this would definitely, it could even go further. They said to about 30%. Now, what do you think of financial stability now across the globe, considering high interest rates and all of that we face?
I think financial stability across the world is something that is of a major concern, and should be a major concern for the authorities, largely because of the higher interest rate environment. But I think the outlook is a bit positive, because those high interest rates came to play largely because central banks were trying to fight inflation. And as I said earlier, many of the central banks that we track across the world have begun to see moderation in their inflation rates, largely because they have been able to raise interest rates in those environments. So the next cycle, to my mind, is a situation where we begin to see global, slowdown in the rate at which interest rates are increased. And after that, we should begin to see a significant decline in inflation, in policy rates, across the world. By then, those concerns will begin to fizzle out. But as we speak, the risk in the financial system is elevated because of high interest rates, and it suggests that we could see high rates of default by banks, customers, both retail customers, and more importantly in this case, corporate customers. And if nothing is done to de-risk global business environment, banks, generally speaking, across the world may be in for a negative impact of high interest rates. But as I said earlier, next year looks more like a year where we will have some reduction in interest rates across the world. If it does not materialize in the first half, the second half is more likely to be a period of globally lower interest rates. And by then, the risk of default by banks, customers should moderate somewhat.
What are you thinking, or what is running through your mind with regards to debt issues? How do you think IMF and World Bank can come in? Some countries are almost defaulting payments as we speak.
So in terms of debt, I think one thing that all countries have to realize is that there's no free lunch, right? And this speaks also to each economy putting in place the right strategy, the right reforms to ensure that they are able to look inward first in terms of borrowing, particularly taking advantage of their local debt markets. But in terms of the support that the IMF and possibly the World Bank can provide, I think those lending by the World Bank or IMF should come to countries that are classified as frontier or developing economies at significantly low interest rates or at free interest rates. But there should be some form of commitment by countries, particularly those in Africa, to ensure the deployment of such borrowings to grow the stock of infrastructure in their economies, and also ensure that the bulk of such borrowings is deployed into investment in green, more like a green economy, to ensure that we begin to move away from all this carbon emission development. So those are some of the areas I expect sub-Saharan African economies to begin to think about. And the only way the IMF and World Bank can be supportive is around low interest rates or even interest free loans.
Let's follow up. And we know that projections have been made before now, not to talk of what is happening. Like you mentioned, Hamas, the attack on Israel and all that is happening around that area. We still have Russia and Ukraine crisis also biting hard on the other side. So what is when you look at the outlook, what sort of conversation do you think countries need to, what do you think they should be having? What kind of conversation should they be having at the moment? That's on one side. I would also like us to look at poverty reduction. What specifics do you think countries can, embark on at the moment to address this ugly trend? The difference between the poor and the rich is becoming so clear. Some say we don't even have an average class anymore.
So in terms of global sort of, development around peace, what my sense would be is that, each country across the world should be thinking around embracing peace and, less of war, because the cost of war is way too expensive. It is easy to go to war, but it is a lot hard to put in place all those, destroyed economies and also structure that any war could have destroyed. It is very hard to bring them back to play. But in terms of poverty reduction globally, my sense is that each economy, particularly those in sub-Saharan Africa, should think around stopping leakages, block leakages. That is very important. The second thing will be around ensuring that we depend less on dollar borrowing or foreign currency borrowing to fix our infrastructure problems. When we borrow in dollars, we remain highly exposed to the fluctuation of the foreign currency at global markets. The third thing to my mind is around ensuring that we invest in infrastructure so that the costs of doing business will reduce, for small and medium enterprises, so that the tendency for them to hike the prices of their goods and services will reduce. If this materializes, then average Nigerians that earn below the minimum wage, and largely speaking, those that are at the bottom of the income pyramid will find life a lot, easier to live in terms of, feeding their families, in terms of disposable income. I think those are very crucial, ways to address poverty issue in Nigeria and particularly across Africa.
What is your understanding now of the FX market in recent times? It's the start of a new week. One way or the other, it's still like the Naira keeps receiving the bashing. What do you make of that?
Well, I think that is most likely going to continue. With the Naira, we possibly continue to see, weakness, largely if we do not see an increase in supply of US dollars to the market, because the challenge is not around demand, the challenge is more around supply. And we have a situation where demand is far ahead of supply. In as much as the CBN has communicated that it remains committed to intervene in the market, that sounds positive. But the question now is, when will the CBN begin to intervene? And I think the CBN is unlikely to return to the market to intervene as expected until when we have an increase in inflows in terms of dollars to the economy, and also a situation where we are able to attract more foreign investors into the economy. And that, to my mind, suggests that we need an increase in interest rates on some instruments, particularly one instrument that we call open market operation, OMO bills. So we think that could be like a quick fix for us. Another interesting thing is that we are in the news wanting to borrow about $1.5 billion from the World Bank. That could also serve as another source of dollar inflow for the country. We should support the ability of the CBN to supply to the market. But I reckon that this is not going to materialize this week. So there are higher chances that the Naira will remain under pressure in the current week.
Some are even worried. Actually, I was supposed to also have Mr. Alaje speak to us around that, but let me touch on it before you go. I'm also worried about the directive on restrictions for 43 items. They say this might not go well for maybe manufacturers or local industry players.
Well, I think, the way we should view that announcement by the CBN is from an efficiency standpoint, right? Because if we previously, before now, those 43 items, those that play in that sector were finding their ways of getting their US dollars. And in fairness, I think, that also partly was responsible for the increase in demand at the parallel market. So whether the CBN was supplying to them or not, they were one way or the other, doing their businesses. So now that the CBN has said they can come to their window and, make demand, genuine demand, and they will get the supply, I think it is positive, and it sends some form of signal around, how their prices can move. I mean, the prices of their products and services. When they understand that they can get the equivalent of the dollars they demand from the parallel market, when they realize that they can get it from the CBN, then they will not take their demand to the parallel market. And that, to my mind, should result in relative stability in the exchange rate at the parallel market after it might have appreciated. We should bear in mind that these businesses are small businesses, largely speaking, and they should be encouraged. In terms of local production, my mind is that local producers of such goods that are now allowed to access FX should look to be competitive in their pricing. Number one, they should also look to be cost efficient. With those two strategies, they can be protected even when the CBN begins to sell to those that import. Those are my views.
Interesting stuff. Finally, before I let you go, we always need to have an outlook, but let's look at inflation figures that just came in a few minutes ago. What were you expecting? And to you, what are the fundamentals fueling these figures in this part of the world?
So if we look at the inflation number published by the National Bureau of Statistics, the number came in at 26.7%, and it is in line with our 26.78%. But I think the broad market is expecting it to be a lot higher because Bloomberg consensus put the number at 27.1%. So number one, what I expect is that consensus will revise their outlook for inflation downward. Number two, the inflation number that came out suggests a moderation in the inflation rate for food. When we have inflation, food inflation at around 2.2%, coming down from around over 3% in the month of August, I think it partly speaks to harvest of food, and that, to my mind, is supportive of that moderation. The second thing that I think happened in the inflation number is around core inflation. Core inflation came in slightly higher than we had expected, and I believe that it is partly reflective of the knock-on effect of higher exchange rate at the parallel market, and also partly reflective of the broadly higher level of goods and services in terms of pricing generally. But my mind is that Nigerians should expect a bit of moderation in inflation after 2023. Number one, because of high base effect. Number two, because there are policies by the government that, if implemented at some point, should begin to be supportive of moderation in inflation. It may not materialize in the first half of 2024, but in the second half of the year 2024, we should begin to see those effects come into inflation numbers.
I must thank you so much, Mr. Tajuddin Ibrahim, Director Research and Strategy with Chapel Hill Denham. Thank you so much for starting the week with us.